Where we are using an expert, okay, we are only able to rely on the work of the expert, whether it is a valuator or a quantity surveyor or an engineer, professional engineer, where we are relying on that expert's calculations, report, findings, or evidence. We are only able to do that where the expert has appropriate professional qualifications. Okay, he has a reputable brand, or he has a good reputation and appropriate experience in the field in which we would like to use him, and he is also independent of the client as well. Okay, so the scope of the expert work that would need to be set by us and agreed with the expert. Okay, so we would then need to agree with the expert on the nature and the objectives of the work, what exactly he's expected to conduct, the work that he's conducting, the timing thereof, how we're going to communicate that, and how especially he is supposed to keep that confidential as well. Okay, so he has a duty to observe confidentiality. Okay, even though we may be using the work of the expert, we still need to evaluate the adequacy. Okay, we need to evaluate whether the work that the expert has done is appropriate. Okay, so we need to look at the work, consider the expert's findings in terms of our own knowledge of the business and the results of other procedures which we have done as well. Okay, so we do that by inquiring of the expert. We need to review their working papers. We need to corroborate that to other procedures. For example, like observing his work, okay, going out and observing his procedures, and then confirming some items with third parties, doing some analytical review procedures, and then obviously also reperforming those calculations. Okay. In terms of his methods and his assumptions, we need to understand what the methods and assumptions was that he had used, and we need to assess their appropriateness and reasonability, and whether that has been consistently applied to in prior periods as well. Okay. Okay, so we need to test the source of his data, okay, and we need to assess whether that data that he has used is sufficient, appropriate, and reliable, okay, and then if we are not satisfied, we should first then discuss that with the expert and then perform additional procedures. We could then also think about appointing a second independent expert, okay, just to assess the findings of our initial expert. Okay, just remember with respect to the auditors, the experts' work, the specific requirements of ISA 500 with respect to audit evidence, and how the audit evidence that we have obtained, that should be sufficient and appropriate, and form the basis of our audit conclusion. Okay, so ISA 240 talks about fraud and error. Okay, just a reminder, this is the responsibility of management. Okay, management has the responsibility to prevent and detect fraud. Okay, auditor's responsibility, okay, is to assess whether the financial statements are free from material misstatement or not, whether the financial statements have been materially misstated or not. Okay, in doing this, okay, in the auditor forming their opinion, through the gathering of their audit evidence, they need to apply their professional skepticism. Okay, we've already discussed what their professional skepticism entails. Okay, where the auditor has detected fraud and error, he needs to consider what the effect is on the financial statements, whether that is material, okay, and how that then would influence the nature, timing, and extent of additional substantive procedures. Okay, so he would also need to consider any reporting requirements, okay, that he would have when he has detected fraud and error. That would be if it is auditing of a South African company, section 45 and 46 of the Auditors Professions Act, okay, in South Africa, and then that would be sections 26(3) of the Public Accountants and Auditors Act in Namibia, and section 292 of the Companies Act, where in South Africa we refer to it as reportable irregularities. In Namibia, we refer to it as material irregularities. Okay. So that needs to be communicated with management and those charged with governance. If we have detected fraud, we need to consider once again the impact on the audit report, okay, whether we are still able to provide an unmodified opinion, okay, and then any reporting requirements that we may have to our regulators, whether it is the PAAB or IRBA in South Africa. Okay, so the ISA 240 requires the auditor to obtain sufficient and appropriate audit evidence with respect to identifying suspected fraud. Okay. The auditor needs to make inquiries from management with respect to how management assessed the risk that the financial statements may be susceptible to fraud, what processes they follow for identifying and responding to fraud, okay, how management communicate with those charged with governance and other employees regarding their view on ethical behavior, okay, and whether there were any actual instances of fraud during the current year. Okay. Remember, once again, the auditor is required to remain professionally skeptic throughout the audit process. Okay, he needs to be able to conduct surprise testing throughout the audit procedures so as to incorporate an element of unpredictability in his audit procedures. Okay, he needs to inquire from internal auditors as well, whether they have any knowledge of suspected fraud. Okay, he needs to evaluate any unusual trends that has been highlighted by analytical review procedures, and also look at other information or external information that may provide evidence with respect to the risk of fraud, whether that is media sources or any other external information. Okay, the risk of fraud is considered a significant risk, and that means that ISA 315, which requires the auditor to test any controls that management have over significant risks, that is then applicable. So that would mean that the auditor would then also need to test the appropriateness of any journal entries, accounting estimates, okay, whether that has review those accounting estimates, whether that has any management bias that is indicated, okay, and then he also needs to consider whether any transaction which is outside the normal course of business, okay, anything that is non-routine, whether that has appropriate business rationale behind it. Okay. ISA 250 requires the auditors to look at the compliance with the laws and regulations. Okay, remember, management has the responsibility for complying with laws and regulations. The auditor then needs to verify whether the laws and regulations that are applicable to the entity, whether that has actually been complied with. Okay, so in doing that, he needs to then once again apply or maintain his attitude of professional skepticism. Where non-compliance has been identified, he needs to consider the effect on the financial statements, okay, whether that would mean that the financial statements are misstated. If that is the case, then what would be the effect on the audit report, okay? If management agrees to adjust, it might result in an unmodified audit report. If there's a disagreement with management in terms of adjusting, then it could mean that the audit report would have to be qualified in some way. Okay. When non-compliance has been identified, the auditor needs to report that to management or those charged with governance, the audit committee in that case specifically. He needs to report on it in the audit report itself. Okay, that needs to be highlighted. Okay, and then also he may have some reporting responsibilities to the appropriate regulatory authority, whether it is PAAB or IRBA. Okay, ISA 260 covers the communication that needs to be conducted with those charged with governance. Okay, the auditor needs to ensure that that what needs to be communicated, it is communicated at the appropriate level. Okay, so the appropriate person is informed. Okay, with respect to matters such as the auditor's responsibility, the scope of the audit, the timing of the audit, whether there were any significant findings, and a confirmation of our independence as well. Okay, so the communication process, okay, what form it should take, the content and the timing thereof, that needs to be set by the auditor up front. Okay, could be that the auditor's responsibility, the scope and the timing of the audit and the independence, that needs to be communicated in the form of an engagement letter. Our significant findings, that could be communicated in the form of the report to management, okay, as well as perhaps our audit report as well. Okay. Okay, ISO 265 indicates that certain deficiencies in internal controls need to be communicated to those charged with governance. Okay, so where we have picked up that during our internal control testing of the controls that management have implemented, we've picked up that there are some deficiencies or some weaknesses in those controls. If it is considered a significant weakness, that is a weakness that if left undetected or uncorrected, it could result in a material misstatement, then that means that we need to communicate it in writing to those charged with governance of the entity. Okay, so we need to describe these deficiencies and explain what are the potential effects, i.e., what are the risks that could result from this deficiency not being corrected. Okay, but we need to also provide specific information, sufficient information, so as to provide the appropriate context to those charged with governance, okay, so that they're able to understand what exactly the issue is. Okay. So there are specific ISAs that handle or that deal with the forming of the opinion on the financial statements, i.e. how the audit work is concluded and reported on, and that we have already done in our concluding and reporting module last semester. Okay, we've already handled those ISAs and the standard formats of that communication that needs to take place. Okay, so there are specific ISAs that deal with special purpose frameworks, and that will only be dealt with in your CTA year of studies, okay, your postgraduate studies. That is outside the scope of your third year auditing course. Okay, so ISA 2400 covers ISRE 2400 covers review engagements. We've already touched on this in your second year. Okay. So just to recap, this is then a review engagement, not an audit engagement, but we would still need to consider pre-engagement activities and quality control. We would also do planning as well, and then obtaining evidence, although it is less than a full audit, it's because we are only expected to assess whether there's overall reasonability of the financial statements, because we are providing a moderate level of assurance, not a high and reasonable level of assurance as in the case of an audit. Okay, but there would also need to be appropriate written representation letters provided for that. Okay. In terms of your ISA exam technique, okay, when you are presented with a question on specific ISAs that you can identify from the question, from the scenario that is presented to you, please do note that it is important to know the theory, but more important to apply those theories. Okay, so you need to be able to identify certain triggers that are presented to you in a test or exam scenario. Okay, so if you are presented with a case of a new client, you need to think of ISA 510, which deals with opening balances. Okay, where the scenario indicates that there's an internal audit function within that entity, you need to think of ISA 610. Okay, where the scenario identifies a group structure, you need to think of ISA 600, which is group considerations. Okay, but remember that application is key. Okay, you have to state the theory, okay, so that you can set the stage. Okay, you have to build the foundation. Okay, but actually building the walls of the house, of the structure of your answer, that is where the maximum marks are. Okay, so that is your application of whatever the theory is to the facts that you are given in the scenario, and you are able to provide context of whether we are appropriately dealing with the ISAs or not, and that is where your marks are. Okay, please do remember that audit procedures require you to use your appropriate audit vocabulary. Okay, remember, we inspect, we verify, we confirm, we observe, we inquire, we reperform, we assess, we evaluate. Okay, in very limited circumstances do we ensure. Okay, because the financial statements and the fair presentation thereof, that is management's responsibility. The auditors come in and then assess whether that has been appropriately done with respect to the different assertions. Okay, so please do remember to use your audit vocabulary, because these are easy marks and it could result in you obtaining a very high mark for your test and your exams. So please do not let this go to waste then.